Hi and welcome. We are back with a new day trading video. This time I'm going to showcase a strategy which is very simple to execute. You don't need a lot of time per day, and it gives you plenty of opportunities every month. So let's go right into it. What we have here firstly is the round numbers. So every 50 pips we have one of these levels here, right? The indicator on TradingView is called round numbers above and below. Let's turn this to 10. Then we have the pivots, classic, very classic pivots, nothing special about them. Let's turn this into a red one maybe. This is the most important level. And then we have the EMA 50 with the 1 hour time frame applied, right? So this is the 1 hour time frame. And then what we are looking for is very simple. We want to see a nice drive to the downside or upside, a pullback into the 1 hour 50 and the daily pivot. Super important, it has to be the daily pivot. And then we want to see any kind of price action that tells us price is going to reverse, to continue the downtrend. And we are going to use Fibonacci extensions for our target. We always go for the 1272. So in this case our entry would be here somewhere. Our stop is always above the high or low. And the target here would be the 1272, so you get roughly in 7.5 to 1. And where we go to break even is these level clusters here. So S1 plus the round number, that would be our break even. The round numbers, they are simply here for confluence. So if you have a round number up here together with the daily pivot and the 1 hour EMA 50, that is a great thing to have. If you don't have it, don't sweat it too much. So how are we entering this? Well, we want to see that price is respecting the 1 hour 50 and the daily pivot, and basically we can go to the lower time frames and draw a trend line on those, right? For example, this would be the appropriate trend line on this, and as soon as this breaks and we get a M15 close, has to be a 15-minute close, confirmed, then off we go. Ideally, these trades happen around the session opens. So this one was at 3 p.m. my time, which is exactly London Open. And those are the best trades, because then you know market is gonna start to move now and continue this downtrend, which started the previous day. How do we identify these trades? Very simple. We go to our charts in the morning. We look if there was any substantial move to the downside or upside yesterday, and then if we see that the 1 hour 50 is lined up as well together with the daily pivot, we can then set an alarm up here. As soon as the alarm rings, we come to our charts and we take the trade. That's it. Ideally, we had a nice uptrend before that as well, right? Which then is being broken. So we are essentially trading the next wave down. So this is something I've been doing for years. Drive, channel, drive. So let's look at a few more examples. I think it's very straightforward and you will quickly get it. So here we have the US dollar CAD. What happened here is that we broke basically below this level, pulled back into this level and the daily pivot and the 1 hour 50 went a bit above those. That is not a big issue. What you would want to do, however, for this one is then wait that the 1 hour 50 gets broken again, and that would be your entry candle then, right here at the round number below the daily pivot. And we're going for a 35 pip stop here. Just make sure that it's just a little bit above the high. We had a nice clean uptrend, breakdown, retest, and then we add our Fibonacci extensions We are going for the 1272, and there you got your 3.3 to 1. Where would you move this trade to break even? When we get here, and as we break below S1 and S2, for example, you can then move your stop always behind these levels. So when we break down here, you move your stop here, you lock in some profit, because then we are protected by the S1 and the round number. Very straightforward. And if we go down to the M5 here, we can again draw a trend line which looks like this, and once this trend line breaks, we have a confirmed entry signal. So here we have an interesting one, where we had basically this whole structure here break, and then we pull back into the pivot and the 1 hour 50, and here again we retest the daily pivot from the other side, come into the 1 hour 50, and again we make this left shoulder head right shoulder structure, then we get the breakdown. So that would be your entry right there. You could also enter here at the trend line break, for example. Down here you would experience a bit of drawdown first, but that's not a big issue. We then apply our Fibonacci extensions as always. So this is 24, let's go for a 30 pip stop, and down to 1272, you get your 4 to 1. And as always, it's great to have these level clusters basically that are adding a lot of confluence to your entry. And actually I see another one right here which also worked out really nicely. Move down, move back up into the daily pivot and the 1 hour 50. We can draw a trend line like this here, for example, like this. We break down, and that would be your entry right there. Stop is at, let's make it 30 here. We add our Fibonacci extensions down to 1272, worked out exactly in this case, and you get your 5.6 to 1. So this strategy really works out pretty well, and important is just that you have these clean breaks and retests. Here we could also draw a trend line, I guess, yeah, which we retested from the backside. So that really adds good confluence to your trades. You don't need any other time frames for this strategy. It's very straightforward. You come to your charts in the morning. Here, for example, I would set an alarm up here. It never pulled back, so then there's no trade, easy. But as soon as you hear your alarm, you have to go to your charts and try to catch that trade. And you just need those clean breakdowns or breaks to the upside. Interesting one here as well, for example. We can draw a trend line here, retested this, didn't quite make it to the 1 hour 50, which is fine. These are zones, right? They have to be in the vicinity. Draw a trend line, and we break back below the daily pivot here. Roughly around here would be your entry. Yeah, 35 pip stop here. You want to include this high. If you want to be more aggressive, you can set it here, but it's better to have your stop protected by the 1 hour 50. That's just important, especially when you enter those trades where it's a bit further away. You have to make sure that this actually happens. 1272. Okay, so in this case you would get a 1.5 to 1. This is not something that we want to trade. So either you go a bit more aggressive with your stop for a minimum of 2 to 1, ideally 3 to 1 or better. If you can't get it, just skip the trade. It's not worth it. And then we have one more here, a long example, really nice downtrend, finally a break to the upside, and we come back into the daily pivot here. We can draw a trend line. This would be our entry. Our stop would be 30, and our target is the 1272 extension as always, and it would be a 3.8 to 1. Takes a bit of time here, and finally we get there. And as always, here would be your break-even point. Then when we break higher, you move your stop up. When we break above this level, you move your stop up. Just lock in as much profit as you can, trail that thing, and we're good to go. That's how you trade this strategy. And I don't think this is too complicated. It only takes a few minutes in the morning to scan your charts. What you simply want to see is when the daily candle closes, which are these blue lines here, you want to see a nice break up or breakdown, and then you can set your alarm on the daily pivot and simply wait for price to come to it. And as soon as it comes to the daily pivot, you go to your charts, you wait for the entry opportunity. If you do this well, you should get around a 50% win rate with this, anywhere between 40 and 50%, and with a minimum of 2 to 1, better 3 to 1, you will be doing very well. So let's take a look at one more just because it's so much fun. So here's, for example, one that I was looking for, but it never happened. We had a really nice move down, break up, and I was waiting for this to pull back into the daily pivot, and the EMA 50, 1 hour EMA 50 didn't happen. I had my alarm set down here, but this is exactly what you want to look for, right? So if we do the replay function, this is where you do your watch list, and this is how it looks when you are like, okay, I want this to pull back to this point, and then we can go higher. We had the structure break here, we had the trend line break, we had a nice downtrend, we have the 1 hour 50, the daily pivot lining up, everything is great. You set your alarm here, that's it. And here's the last one, a bit not so obvious one, but in the end quite obvious as well. We had the trend line break, we had the level break here, together with the round number daily pivot 1 hour 50. They are all here in the vicinity. Obviously, when you do your watch list in the morning here, you wouldn't see this as a potential trade setup. If you scan again a bit later in the day, then it has materialized. Now all you're waiting for is the pullback. We add our Fibonacci extensions. We look for the entry down here somewhere. You get your 2 to 1 with a 20 pip stop. That's the minimum acceptable trade reward for this strategy. Okay, I hope you like this one. Check it out on your own charts. You can use the replay function of TradingView, for example, to get a feeling for the strategy. Just important, really important, is simply these long extended trends before the break to the other side. So here, really nice swingy trend. Eventually we finally get the breakdown, we get the pullback into the daily pivot, round number 1 hour 50, and that's your go sign. These are just by far the best plays, and they give you the best risk reward as well. And there's another one right there, pullback, and off we go. So this should give you a few trade opportunities each week. Very simple to execute. Enjoy, and thank me later.